My name is Josh Spurrell, and I'm the president and founder of Spurrell & Associates Chartered Professional Accountants. Notice to reader financial statements are sometimes referred to as NTR financial statements. Generally, they are unaudited financial statements. These statements are a cost-effective way for the average small business owner to organize their year-end financial information. The CPA's professional obligation when it comes to notice to reader financial statements is to make sure that the reports are arithmetically correct and plausible. With notice to reader financial statements, the CPA is required to determine if the information is plausible. With audited financial statements, the CPA is required to confirm that the information is correct. For example, let's look at the cash balance on a set of financial statements. With notice to reader statements, the CPA can take the information supplied by the client at face value so long as it's plausible. With audited financial statements, the CPA would have to contact the bank directly and obtain assurances directly from the bank on that bank balance. The main advantage of notice to reader financial statements is that they are cost effective to assemble. The secondary advantage of notice to reader financial statements is that the CPA can apply their professional judgment to assemble financial statements that are meaningful for the entrepreneur rather than use a standardized approach. Besides cost and flexibility, notice to reader financial statements allow the accountant to be more involved in helping you with your business. When the accountant is doing audited financial statements, they are governed by independence restrictions which prevent them from helping significantly with the internal workings of the business. I would suggest that the additional cost for reviewed or audited financial statements for most small business owners is not the way to go. Generally, those funds would be better off spent on strengthening the internal reporting systems that ensure the day-to-day reporting that you make decisions on is more reliable rather than ensure just the year-end reports are accurate. When doing reviews or audits, the accountant has to ensure that they are independent from the business decision-making of the corporation. Thus, when the accountant is doing a review or audit, they are limited in the depth of advice they can provide the average entrepreneur. We often find that the financial statements issued by non-CPA firms are not accurate. Moreover, these financial statements are not helpful when applying for business financing. At Spurrell & Associates, we routinely go above and beyond the plausibility test when assembling notice to reader financial statements. We routinely gather information such as bank and credit card statements to ensure the balances are accurate. Additionally, we import the entire general ledger into our year-end software to increase the likelihood that the statements we are assembling are ready to make business decisions.